Thank you everyone for joining this evening's webinar, and welcome. Thank you for taking your time to join us today. My name is Takada Nyamambi and I'll be your host for this session. We're thrilled to have you here as we discuss how to make your business fundable and position it for growth and success. This webinar is part of our ongoing Fundable Webinar Series, designed to equip entrepreneurs like you with practical strategies to secure funding and grow your businesses. Today's session promises to be insightful and interactive, so I hope you're ready to learn and engage. Before we begin, let's go over a few housekeeping items. Please make sure that your microphones are muted during the main presentation to avoid background noise. Feel free to use the chat function to share your thoughts or questions throughout the session. After the main presentation, I'll open up the floor for a Q&A session with our guests, and you can type your questions in the chat box. This webinar is being recorded and we'll share the link with you after the event. This evening, we're honored to have two incredible guests with us today. We've got Msipa. Mark is a dynamic leader with extensive experience in business development, project management, and financial planning, with a proven track record of helping businesses scale and attract investment. Mark is passionate about empowering entrepreneurs to achieve sustainable growth. We also have Reva Mandava. Reva is she's an accomplished professional with expertise in strategic planning, organizational development, and resource mobilization. She has a deep understanding of what it takes for businesses to be investor ready and has worked with various entrepreneurs across industries to refine their strategies for growth. Mark and Reva will join us for the Q&A session after the presentation to share their valuable insights and answer any questions that you might have.
Perfect, thank you. So our platform, AFCFTA 24, Africa Continental Free Trade Area 24, is an initiative of Advocado, which is a company that we set up to drive investment and support for entrepreneurs and SMEs in Africa. And through that process, we've come up with what we call a fundable process. And the fundable process is a 3-step process that entrepreneurs go through to then help them understand how to become fundable.
Okay, perfect. At this point, can I invite Mark and Reva? Please could you switch on your videos and join us?
Hi, good evening.
Evening. Thank you so much for taking your time to be with us this evening.
Thank you for having us.
Hi, Mark. Welcome. How are you?
Good. How are you, Chad?
Very well, thank you. It's been a long time since the time we hosted you on the podcast, 6 African Tech. Good to see you.
Yes. Thank you for having me once again, and thank you for having Reva as well.
Thank you. Welcome, Reva. Hope you're well.
Yes, I'm good. Thank you for having me.
Perfect. Thank you. I think, maybe as we wait for question and answers, for questions from the audience, maybe just take us through, Reva, where are you placed? What do you do? And what have you been working on? Thank you.
Yeah. So I currently work for the Norwegian Development Bank, or the DFI, called NOFund. And I look after the climate investing activities across Southern and East Africa. And before that, I worked at several DFIs and investment banks, both international and local DFI. And I think, maybe where the questions come up, but also having, spent time in local funded DFIs versus international ones. There's some of the points that you've alluded to around what you're calling fundable or bankability of businesses that I think I definitely noted in my time, and I'm happy to share some of those experiences.
Thank you very much for sharing. Mark, please share with the audience who Mark is and what you are working on at the moment.
Sure. So for those who may not have seen the last time that you hosted me, I am in the corporate finance space. I currently work with PwC in Papua New Guinea. That's in Asia Pacific. Before that, I was involved in various roles in the venture capital space, mostly, both on the funding or the investing side, where I was an associate or an analyst doing market research, supporting kind of understanding what sectors are interesting, what businesses in which sectors are interesting for people who had money to invest. And then on the other side, I was also involved with a startup based here in Zim. And we went through 2 accelerator programs. The business was funded a couple of times and is currently expanding its operations in the prop tech or fintech space. I'll say as much as I can about kind of both sets of experiences, but obviously some of my responses will be limited for confidentiality reasons. But I'll say as much as I can to help those on the call who may be looking for perspectives or opportunities for funding.
Thank you very much. Yeah, so we might as well dive in. I think I'm an entrepreneur, and one of the key challenges that I have seen on the continent when it comes to funding is that entrepreneurs actually do not even understand the concept of funding. What has been your experience, and how do you think? Yeah, maybe what is experience? If we start with you.
No, I think that's true. There are some entrepreneurs that probably on the funding side, they're not as sophisticated. And I think to those entrepreneurs, I would say play to your strengths. Most of the time, it's really very technical entrepreneurs that are like that. So it's either they're really good at farming, they understand anything and everything that has to do with that, or very good, engineering and building stuff. So I would say play to your strength and make sure that the technical stuff and the product offering is great, and seek assistance from, the advisors out there, the platforms like this that also plug you and connect you with people that are probably more knowledgeable than yourselves. So that's probably something that I would highly encourage entrepreneurs who feel they're not as financially savvy. Not everyone needs to be. Just cling to your strength and seek help where you can.
Certainly, thank you very much, Mark. What has been your experience? What have you seen?
Yeah, I think, carrying on from what Reva's just alluded to, I think a lot of entrepreneurs or founders or business operators don't start from the perspective of what does it take to get money into my business. I think sometimes maybe the focus is on just operating, generating revenue, managing costs. In terms of my experience on the operational side, I think one of the things we found as we were going through the fundraising processes was articulating the problem that we were solving in a way that a range of different investors could understand. And one of the limitations, I think, is something that Justice alluded to in his presentation, is there actually isn't a lot of high quality data on African markets, African businesses, customer segments, earning potential. And so it's difficult, but not impossible to say, what is the size of the opportunity? What is the total addressable market? How much of that do you think you can actually get, and why? And so a lot of, perhaps in more advanced markets, what we see is that there's a lot of really rich data that's already there. And so startups focus from the perspective of not so much finding the gaps in the markets, but the markets in the gaps. For us, we find, or the perspective we developed was that the startups are themselves the research process of identifying what are the gaps in the market. And so the better that operators, are able to run their businesses and prepare them to attract capital, the easier it is to actually get the money into the business, because you can say clearly, what is the problem you're solving? How big is it in dollar terms or rand terms or whatever it is? And why do you think you're going to be successful? Because you can identify how big the market is, who are your competitors, how much market share do you have? And you can kind of tailor your offering to different investors across different funding rounds to appeal to whatever they want to achieve by investing in your business. So I think those are the 3 big things that we came to realize. And it's still an ongoing process. I mean, most people, for example, if you're raising for a Zimbabwean startup, the 3 questions you'll inevitably get are around, currency stability, political stability, and, how big is the market really, or use of cash versus maybe online transactions and that sort of thing. And there are ways and means to kind of mitigate the risks, but you have to really have a solid handle on your business and understand it to be able to sell it. So that's kind of my contribution at this stage, but we can go deeper if anybody has any questions, specific questions.
Thank you. Thank you very much for sharing. And it brings in insights, challenges that we also face, which is what forms events, contingency trade area is trying to come up address these things to do with currency, volatility on currencies, and especially the small markets in terms of economies. It's quite interesting that they also gives examples with their opportunities, but they're also huge challenges. If what has been based on your experience, have you seen as businesses that are easily areas do you see?
I think there are a couple of, I would say, thematic themes that are coming out like within the last 2-3 years. Climate change is definitely one of them. So businesses that are either looking at mitigation or adaptation, particularly as it relates to the agri value chain, I think that's quite a big space. There's also food security, again, going backwards a little bit and looking at how African countries can supply their own needs and effectively stop importing such that their currencies and their FX reserves are not depleted on importation. So that's become quite topical. And with the rising young age of Africans on the continent, I think tech and tech-enabled businesses have also been on the rise. We've seen payment businesses, I think, have also thrived in Africa. We have seen businesses that make it easier to send money also thriving. So I think thematically around those three, what you would look at is they address core needs around, I think there's access to, obviously access to energy around the climate theme, and then there's access to food, and then there's connectivity, which is a big thing in Africa. I think any businesses that address any of these core needs will find it easy to attract funding.
Certainly. So basically what you're saying is businesses that solve faced. Talking about climate change, many entrepreneurs in Africa did not, based on my experience, did not believe in a lot of issues we are facing when it comes to climate change. How are you seeing entrepreneurs or businesses moving into the climate change space? There are quite a number of businesses, and it's something that any other traditional business can relate to division and also others to climate change and then give. Are you seeing?
What we've seen is interestingly that this coming from the funders themselves. So you are right. Traditionally, businesses in Africa don't have a big emphasis on climate change activities per se. But as they look for funding, and most of that funding being international or donor financing, I think what we're seeing is that a lot of the funders, even local funders, do then place kind of obligation on those businesses to address certain climate initiatives. And so those businesses or those funders drive that. And that's what we've seen. And so it's not specifically that you have a department that deals with it, depending on the business and what the business is doing. I think climate change or climate change activities can vary. If you are making a payment app, for example, your effect or your role in climate activity will probably look very different to a farmer. And that would look very different to somebody who's making chairs. And so I think what's important is to make those climate activities quite nuanced to the businesses. And again, a lot of this is coming from the funders. So take as much, I think, recommendations from funders, what they need. And there's a lot of capital, as I said, available support businesses that don't know where to start in terms of consultants that will come in and help you kind of figure out what your climate response as a business should be and what it should look like. Because again, it needs to be very nuanced. I don't think there's a blanket approach to what climate financing activities should look like.
Thank you very much. And hold on to that thought one. There's a lot of capital earmarked for. This is not something change. Mark, what has been, you've been involved the chat. What has been your experience to getting funding from investors, and what lessons can you share based on what you've got?
Thanks a lot for the question. I think it's a range of experiences, mostly kind of in the early stage startup side of things. So I'll speak to that. I think the first thing is I alluded to it earlier, a lot of founders or operators are focused on running the business day to day. And whilst that's obviously necessary for the business to survive, you reach a level at which you need to scale with other people's money. And it's at that point that the challenges start. And so in terms of, I'd say the three major challenges that I've seen come across is firstly, the founders not having a clear understanding of what market they operate in. And so they understand their business maybe, but they don't understand the competitive landscape, who are their biggest competitors and why, how much market share do they have, how many people are wanting the product or the service they're selling, and are they going to continue to want it going forward, or is this just a moment in time? And we saw a lot of that with, for example, during COVID, there was a lot of demand for certain types of goods and services, maybe online deliveries and that. And some of those growth rates have not continued in the post-COVID environment. And so that's kind of one area. I think the second one is a lack of depth in terms of the skills across the team. And so you'll find there's probably a reliance on one or two key people. Maybe if they are the ones who understand the finance or the operations, or they know the customer or the customers. And so when you're now going around asking people to put money into your business, one of the questions will be, well, what happens if you or your major player leaves the team? There's all this money in this business, and maybe it can't be run to the same level without the one or two key people. And then the last one is just people not having, adequate systems, processes, information in their businesses. So you really should have kind of at a basic level, a basic set of financials. You should know how much you make. You should know, your running costs. You should be able to speak to terms like EBITDA or cash flow, revenue. I think there's enough information online these days, and especially in the age of AI, some of the tools are free, just to be able to put together a simple set of documents that somebody can read through and understand what it is you do, what's going to take you to the next level, and kind of where you're at now, and clearly understand that regardless of what country you're in, what market you're in, what product you're selling. I think those are some of the basics that I think now are expected. But I think Reva probably has a deeper perspective on the range of businesses she's funded across the continent.
Thank you very much, Mark. And you spoke about the team. That is one of the key things. And you find that entrepreneurs usually tell you, I can't afford to involve the type of people who are saying team. So it's quite an interesting to become what was chat I suggested is here. That is discussed to us, and how much does the fund give in terms of success of basic fund.
As I said, I've worked for both local and international DFIs. When I worked for the local development finance institution, whose mandate was to specifically look at how South Africa could manufacture more goods as opposed to import. So import placement. And in that business, they looked at anything from probably $500,000 there was no cap really. We could go up to 50 million. But currently I focus fully on climate change and mostly renewable energy projects, which tend to be quite big projects. And our minimum ticket size is around $10 million. And then we don't really have a maximum. I think it's more single party exposure in the midst that we need to manage. And so what I've seen is when we worked for the local DFI, funding like smaller businesses, I found that a lot of those small checks went a long way in terms of the impact. And so there is a need really to balance out, I think, bigger checks, which I think are important in the work that we do now. But the smaller checks wanted to impact the communities. I think the target group that we're trying to reach when we talk about lifting people out of poverty much more. And so I really believe that the smaller ticket sizes and funding those smaller, more not small, medium, but smaller businesses is potentially the lever that I think as Africans we really need to pulling if we are to eradicate poverty by 2050. And so that's really been my experience that the smaller ticket sizes have more impact. The bigger ticket sizes have impact in terms of sort of the projects that are built out are much bigger and they are scalable. And so you can see them, but the impact is on the small scale. And then in terms of the teams that we've seen, I think that's probably, I saw a question around, what do you do, due diligence that's conducted. I think that's probably one of the most underrated parts of the due diligence, the team and what the team looked like. I think that is so important. I have seen, I think, some people who rock up at meeting and really, I think the way that you come across and professionalism skills, that I would sit across the table and I could kind of, get away with it. And, I maybe I'm understanding, but I'm in a group full of international funders, Norwegians, Germans, and they really take that stuff really seriously. And so I think even if the product is good, even if the market is good, I think there's a huge part of the due diligence that rests on the team, who the team is, what the expertise are, and how they come across, how confident are they in addressing what the key issues are and how they're going to fill the gap and how they're going to fail, etc. So I really feel that's probably something that's underrated. The team probably makes up 50% of the due diligence in my opinion. So that's quite key.
I think yeah, why not outreach fund? Why not the that you have seen since this having influence or one of the two that can bring us I would show the activity. Not the two. That's
Sure. So I think there are three, I'd put them into three categories. The first one for me is financial. So when I say financial, what I mean is not having any numbers around your business. If somebody asks you, how much do you make in a month, or, in the last 6 months, how much have you made? You really should have that number down pat before you get on a call with investors or potential investors. People are going to ask, what are your running costs? What is your cost of sales? What are your gross margins? And those are terms that really, by the time you get onto a call with an investor, you should know what those terms mean and what those numbers are. The second one, I think, alluding to what Reva said, is the team. And I guess I don't need to elaborate on that. I think she covered it quite comprehensively. And then the third one is just clarity in terms of where the business is going to go with the money that you're asking for. So a lot of founders tend to focus on, here's where we are now and here's where we want to go. But there's no clear link between kind of the now and how to get to where they want to go. And so, you hear all these kind of grand projections and the hockey stick growth projections on revenue, on the market size. And, you give me $10, I'll turn it into $1 million in 3 years. And I think a lot of the time, whilst it's good to be hopeful or ambitious as an entrepreneur, it's also necessary to have a clear plan in terms of when you're using other people's money, what are you going to do with it? So are you going to buy a new machine if you're in manufacturing? Are you going to spend it on marketing to get new customers? Are you going to hire new people? And is that what's going to move the dial in your business? So just to clear, I think those are the three red flags, or the areas where I've seen a lot of red flags that really I've seen be quite significant deal breakers, regardless of kind of how appealing the rest of the business case might be.
Thank you very much. What is it?
Yeah, I think Mark touched on more the tangible things, so the things that you can see. But I think it's important to note that as funders, we are people and we are doing a due diligence, and funding a business is run by people. I think that's quite important. That as much as we're looking at the numbers, looking at all this macro stuff, we're also looking at the people. So in addition to that, I would add maybe the intangible, softer stuff that entrepreneurs need to maybe just be aware of. And the first one is on, I would say, confidence. And the confidence comes across when you know your story. Going back to Mark's point, if you know where you are, how you're going to scale up, where you need to get to, I think practice that and just appear. The confidence that comes with being prepared and understanding what you're presenting, I think is quite clear. When somebody's unprepared, when somebody's a little bit confused, it does come across. So I would just say prepare and do the work behind the scenes. And then the second one is team cohesion. I've seen quite a few times. When it's 2 or 3 founders, we have a proverb in my language that says, something along the lines of the dirty laundry should always stay in the back room. And so when founders appear very disjointed in a first or second meeting, I think that's a big red flag. So knowing and understanding how well the team works together and seeing that people are aligned is something that I think entrepreneurs or people, especially in a business partnership, should be aware of, that we are looking for when we're sitting across from them during a due diligence. And then the third one is also just emotional intelligence. I think both, starting a business, trying to find funding, and running a business is stressful. And so just managing your own emotions and making sure that you're appearing in meeting, collected, calm, and, not looking like, the dog ate your homework sort of thing. I think that's quite important. And these things, as I said, are intangible and they might look small, but they really do make and lasting impression, especially if it's the first time you're meeting a potential funder. So I would just say, just be aware of those things and practice the emotional intelligence of how to manage your emotions during a stressful situation, how to communicate to funders during a stressful period. I think those things are quite key as well.
Thank you very much. Running out of time. Yeah, appreciate your insights. Just check the questions. It's the 2 next 5 minutes. Questions is much talk is once it's what's due diligence. So what due diligence to
Yeah, maybe help that. But I think there are like 4 or 5 areas that are key for due diligence. The first one is on the KYC, which I understand Mansa or the platform that you're building addresses. I think that's quite key and important. And then the second one is probably on a legal and good standing. I think it's quite important that the businesses that we're funding are both compliant from a tax, regulatory, setting up, etc. And then the 3 last ones are quite key. Any business needs to understand that you need to have a product to sell. So that's the marketing due diligence, where we're looking at what is it that you're selling, how big is your market, who's your competitor, and what is your key unique selling point. What is it about your product or your service that stands out? So that's part of the marketing due diligence. And on the technical due diligence, we really look at how do you get your product to the customer. So this could be in terms of logistics, it could be in terms of manufacturing, if it's a manufacturing business, or it could be just in terms of the value chain from, where the product is created to how it lands ultimately in the customer's hands. So having a good grip of those logistics and walking through them is quite key. And then the last one is something that Mark has touched on. It really is around financing. So this is, kind of the engine that runs everything. As you're creating a product, as you're getting it to your customer, your house needs to be in order. You need to understand how much am I making? How much am I selling it for? How much am I paying people? How much am I left with? You need to understand what your working capital cycle looks like in terms of, how long do I take? How long do I need to pay somebody else? How long do they give me to pay them back, etc.? How much stock do I have? So really, the finance is I would say the engine that runs everything. And then on the technical, how you get the product to your customer, the product or the service, if it's a service. And then the marketing is on what is the service, what gap is it filling, and what are the competitors? Why is this important? Why do we think this could work? How do we feel this? Those are part of the diligence process that part of what we look at when we look at funding businesses.
For sharing those insights on Mark, share things to add.
Yeah, I think Reba has really covered it comprehensively. What I would just add is maybe two things I would ask entrepreneurs not to do that I've seen done. The first is when you're asked who else has invested, or sometimes at a higher level, who's on your cap table, don't lie about having received investment, or don't lie about who has invested. And sometimes maybe you've had a conversation with a potential funder, but don't make it seem as if, that conversation means that that they have transferred the money, or that they're about to transfer the money. Similar thing, but for, partnerships or customers, sometimes you look at somebody's pitch deck and they claim or allude to having some kind of partnership agreement with a major corporate, or having a major company that everybody knows as a key customer. I would strongly urge entrepreneurs not to do that. And the reason is because the investment community is quite small and people talk to each other. They also fact check everything you say. And so I'm not going to take it on your word on a phone call that, you've got an XYZ investor and Google is your biggest customer. I'm going to inquire with people, to check that what you say is true. And of course, if it turns out to not be true, then not only will I not invest, I will also tell other people not to invest or to deal with you. And so I really just want to emphasize that, I see it happen quite a few times. I strongly recommend that people don't do that.
Other question is, how do I use this invoice? If the receive the answer, if you not receive the answers, invoice, it's from the invoice. Which is something this is still share that. Just I guess it's up. It's straight to service. It's just represent. It's last thing it's supply. So you ask to service. Must be showing the supplier that you are with and notice which access the yes share even this episode just share them. So maybe here's any chance to unmute. Do you want to answer the question? Our last question.
Yeah, I think it depends on the type of business. For startups, you won't have financials, for example. So I don't necessarily, I think you can have projections if you don't have historical financials. But the kind of thumb rule is around 3 years, 3 to 5 years, if the business has been around for that long. If not, then just prepare a good set of forecasts that again speak to where you are, where you're going, and a story that links the two. I think it's sufficient.
Got you. Questions? Yes.
No, I think, as I said, I do believe that small, medium businesses are the engine to growth in Africa. And so to all of the entrepreneurs, maybe who might have joined or looking for funding, I think my parting word would just be that the work that they're doing is important. And there are lots of, platforms such as this and other. If you do your research, just connect and reach out. If you're unsure about anything, and see that, there are actually people on the ground who want to help you get the product to market. So yeah, that's about it.
Thank you very much. I will talk to you. I just want you to go past one resource that is on that you need that is what
Sure. Just in terms of closing thoughts, I would really encourage entrepreneurs, operators to start making use, or not start, but to scale up use of free tools, especially AI, not in the sense of running your business through it, but just understanding what it can do in terms of automating some of the manual functions that take up your time, your energy, your team's time and energy, your costs. Leverage the stuff that's available in the information age so that by the time you're getting in front of people asking for money, your focus is on what you need to do strategically to get to the next level, as opposed to plugging gaps that, computers and software can do more easily and faster and cheaply than human beings. So I just want to encourage people to make more use of, things like ChatGPT, Perplexity, the Google AI and large language models. There's a lot of really good tools around these days that can help you understand the market you're in, what are the available funding opportunities. And I strongly encourage people to use those. It'll save you a lot of time and money.
Thank you very much. Any book or podcast or that you want to?
Yeah. There were two books. One that I think I read 2018, and this was the book that we were given, and I think it's quite good. I had to look it up because I had forgotten the name. It's called African Entrepreneur, A Practical Guide to Growing a Business in Africa by David Mutua. I think it's quite practical. And what I like about it is it gives step by step. As somebody who was funding businesses and not even an entrepreneur, I found it quite helpful to understand how entrepreneurs think and how businesses get built. So yeah, the African Entrepreneur, A Practical Guide to Starting and Growing a Business. And then the other one is Becoming an Entrepreneur in Africa by Robert L. Moore, which I think also is quite a good one. It offers advice on how to navigate the local business landscape and also speaks to, I think, challenges of in a broader regional context, which I think is quite important if you are thinking about scaling up.
Yeah.
Am I allowed to recommend your podcast, the Sixth Podcast?
Sure.
I'd also recommend, there's a book called Africa's Billionaires. I've forgotten the author, but it profiles about 18 people who have achieved really powerful success across the continent, starting their businesses in Egypt, Zimbabwe, Nigeria, and just understanding the journeys and the challenges that they had to face and overcome. The reason I recommend this book in particular is I find a lot of entrepreneurs read, Steve Jobs' biography or the history of Facebook and Twitter or Meta now, but some of the structural issues that maybe would support the kind of businesses or the founders that you are inspired by may not apply in your context. And so I think relying on, to Reva's reference, African stories about African entrepreneurship and overcoming African challenges, I think are more relevant, especially today where we're seeing, challenges unique to us on the continent and the problems that we have to solve amongst ourselves. And so that would be I think the Sixth Podcast has a lot of really powerful nuggets. And I'd say that book, Africa's Billionaires, as well. Those have been quite instrumental for me.
Thank you very much. Thank you very much. See you again next week.